Hello, everybody, and welcome to IHRB's third podcast in its series following the COVID crisis. Many of you joined our first, which was on the broad policy environment and the new social contract. Last week, we had one specifically on supply chain with colleagues in Bangladesh. And today, we're focusing on trade in particular. Very pleased to be joined by some eminent speakers. We will be starting in a minute or two with Ambassador Fazel from the Swiss government, the ambassador to London, Matthew Chamberlain, who's the CEO of the London Metal Exchange. And then after a bit of discussion, I'll bring on stage the other three, which is Jan Kavita, who is from Anglo American Mining Company, Pamela Koch Hamilton from UNCTAD, and Tyler Gallard from the OECD. We've had quite a lot of questions in advance, and there'll be plenty of time for Q&A. But if you do have questions as you're listening, there is a questions tab, which you can use to post questions in real time. And our speakers can see that, and they can try and answer those questions as well as any that I fire at them during the course of this. I think it's important to say a few things before we start. The platform that we use isn't glitch-free, but it has very strong data protection credentials, and that's why we use it. So I hope you enjoy it. Yeah, I think, and then moving on then to the issue at hand. Why have we focused on global trade, and why have we tried to link it to the COVID crisis? Well, I think in the past 2 months, there's been an unprecedented slump, collapse even, in global trade. I was reading recently that it's the biggest collapse in global trade in recorded peacetime history. In the wider context, the World Trade Organization is in some level of crisis. The appellant body there is not functioning. There is a standoff, or some would say a trade war, emerging between China and the USA at the moment. And so trade has become a big political issue, and it's against that backdrop that we need to consider the issue of commodities trading. Commodity trade and commodity trade finance clearly has significant leverage, and perhaps it's been overlooked to date in some of our discussions around responsible business conduct. For those of you who are on the OECD webinar yesterday, we're very pleased to hear the European Union Trade Commissioner, Commissioner Hogan, mention the importance of due diligence, social and environmental due diligence in relation to trade writ large. So on the issue of commodity trade, whether it be hard commodities, metals, minerals, or soft commodities, foodstuffs, cotton, etc., the big question of today really is, to what extent, how can we apply non-financial due diligence in the relation to commodity trading? And particularly in the context of the crisis around COVID and some of the vulnerable communities who are suffering at the moment, what is it we can do collectively to uphold human rights and make the lives better for those who are suffering the most? So I'll start with you, Matthew. Matthew, welcome.
Thank you.
CEO of the London Metal Exchange. Maybe you could just say a little bit about the trading behaviour of the London Metal Exchange and what you've observed over recent weeks in relation to the current crisis.
Absolutely, and firstly, thank you for the invitation. It's a real pleasure to be here. So what we tend to see with metals as a commodity in a crisis period like this is that initially there will be a significant increase in trading activity as investors perhaps square off or liquidate their positions. Perhaps there's a race to cash. And of course, as the physical community rebalance their hedging portfolios to account for the fact that there will be less over the coming months. So in March, we saw a very significant flurry of activity. But what we're now seeing is the market bedding in for the long term. So trying to work out what is the supply-demand implication. Clearly, demand for many metals has come down. For some metals, like copper, there have been mine site impacts, so supply has come down as well, so there may be balance. For others, like aluminium, there appears to be oversupply, and that means that traders are starting to think about whether to finance, whether to put metal into warehouse and wait for better times. But I think across all of it, everyone is very conscious of the point you made, which is that the supply chains that we're just observing at the LME lead back to real world people, and often, as you say, to communities for whom this will be a very difficult situation to manage.
So is this issue of social and environmental due diligence a pre-existing issue for you? What have you already been doing in relation to this?
Yeah, so I think it's absolutely a pre-existing issue, but one which is really thrown into sharp focus by a situation such as the pandemic. Maybe just to give a little bit of background, I think for 140 years, the LME has maintained these so-called brand lists, which are effectively the brands of metal which can be delivered on our market. And by implication, they're also the brands that are generally common currency in the market. They're the brands of copper, aluminium, or cobalt or tin, which are seen as good. And for the first 135 years of our history, the only criterion to be on those lists was metallurgical. Is your metal of a sufficient chemical quality? And in the last 5 years, driven, I think, by the great work of civil society, of the OECD, of a number of politicians, we have seen an emerging consumer consciousness that says, you know what? The battery in my phone might be made out of fantastic chemical grade cobalt, but I want to know more about the social impact of where that came from. And so we certainly have, in the last 5 years, seen through our supply chains coming from the consumer end that down the chain and eventually reaches the producers, and often that runs through. We've seen that extension from metallurgical to ethical considerations.
Okay, so take two of your commodities. I believe aluminium and copper are two of your biggest. What are the kind of questions that your clients are asking? Is it mainly on the environmental side, or are you seeing it also on the human rights side?
So I think you've picked two great examples there. So aluminium, the issue is primarily around environmental, because if you look at the footprint of the production of aluminium, in many people's minds, the greatest potential for harm is the energy consumption and the source of that energy and the carbon footprint from the smelting. And let's remember that aluminium is very much a material of the future, and it's a material that we're going to need to lightweight our cars, to cut down on emissions. But we want to make sure as a society that the production of that aluminium that's going to have this great effect, it can be as environmentally responsible as possible. So that's an example of where we're increasingly seeing users, and hence sources of capital, investors, traders, saying, how can I know more about the carbon footprint of my aluminium? Moving to copper, and even more so for cobalt, given the distribution of those ores, and particularly the fact there is a fair amount of mining in certain areas such as the DRC, where there are a number of valid human rights concerns, the focus, say particularly for cobalt, is less on the environmental, and it's more on the supply chain management, worse forms of child labor, conflict finance. And that's where we've taken the OECD's due diligence guidance, which I think is a fantastic piece of work and a huge testament to everyone who was involved in that, turn that into rules which will then apply to the metal that trade on our market. So I think you picked some great examples there, some environmental questions, some human rights supply chain due diligence questions, but all going to that same factor. Okay,
and final question for you for the time being is how does COVID change any of this? What's COVID's legacy going to be on this due diligence you're doing? What are the changes you need to make?
So I think it's twofold. Firstly, I strongly believe, this is a personal view, but it's one that I feel quite strongly, which is that humanity, having gone through this very shared experience of the pandemic, I do think that consumers are more likely to stand up for what they want going forward. This whole concept of building back better, I think there will be an awful lot of pressure, rightly, from consumers to say that we're not going to be fobbed off by excuses that we don't know, or you can't source that in an environmentally sustainable way. I think that pressure at the end of the supply chain, which is pushing upwards, is going to get even stronger. The second element is I think it underscores for industry the value of supply chain tracing. I mean, the big challenge with getting these principles embedded is it's a lot of work to trace your supply chains. We understand that, and we're very conscious of the burden that we're putting on our producers with our new rules. But at the same time, COVID is a great example of where you do want to understand your supply chain, because in a very short period of time, for both commercial and ethical reasons, you need to understand how that's going to change, how it's going to shift, who you need to support through your supply chain. So I hope it underscores in the minds of industry the value of having a well-mapped and diligenced supply chain for just so many reasons.
Thank you, Matthew. I'll be back to you in a minute. Ambassador Fazell, first of all, thank you for joining us today. You've long been committed, I think, to not only the trading interests of your country, but also the human rights interests of Switzerland. Switzerland is also a very important commodity trading hub, as is London, both for hard and soft commodities, like cotton, for example. We know, because we've worked with your government and stakeholders in Switzerland on this for a few years, that the human rights risks are not just in the field and the mine, but they can be sort of mid-supply chain. I think the COVID crisis has, for example, thrown a light on the plight of seafarers stranded on ships around the world at the moment over recent months. Perhaps a stakeholder group, the shipping elements of this is not something perhaps we were thinking enough about even a few months ago. But anyway, my first question to you is, why has Switzerland taken some steps in relation to due diligence and commodity trading?
Thank you, John. Thanks for having me, and congratulations for this excellent cycle of webinars. I think there are three elements to your question. One is human rights. Human rights are fundamental to Switzerland. It's a fundamental value as reflected in the Swiss federal constitution, and it is also a central part of our foreign policy strategy. And we want to reflect that in the way we conduct ourselves domestically and internationally. So factoring in human right is how Swiss do a Swiss-made sort of approach, if you will, domestically and in foreign policy. And then secondly, as you just said, Switzerland is a very important, considerable commodity trading sector and hub. It is of utmost importance for the Swiss economy, the trading companies, of course, but then also the whole business environment that goes with it, with finance, banks, insurances, and certification companies. And as the trading sector, commodity trading sector still grows, questions are increasingly being raised as to the responsibility of trading companies regarding human rights. That is increasingly important because the production and the extraction of commodities is frequently in countries that are characterized by weak governments, fragile governments, inequalities, and so that leads to an increased need for a particular responsibility of the producers, but also of the traders. And I think this is a legitimate demand, which corresponds to the OECD due diligence guidance regarding the conflict affected and high-risk areas. So it's something we have to look at. So once you have those two elements, the importance of human rights as such and the importance of the sector, then how do you bring those two elements together? And there, our approach is to seek positive initiatives, platforms that bring together all the stakeholders and the actors, and which are able to produce something which responds to the needs of the private sector, of the people concerned, of sustainability in terms of the planet as a whole. So we have then commissioned this guidance to support companies in implementing human rights due diligence in their own activities and along the supply chains, guidance that are based on the United Nations guiding principles and that are also corresponding to the OECD guidelines.
And why did you engage in a multi-stakeholder process to produce the guidance? I mean, I was involved in it a bit myself over the past few years, and it wasn't always easy to bring the traders together with Swiss civil society under the auspices of the Swiss government.
Yeah.
A lack of trust, I would say, particularly at the beginning of the process. Why go through all that effort?
Well, first of all, can I acknowledge the great contribution of all the stakeholders that participated in that process, the NGOs and the private sector. And then why to choose such an approach? It's probably just the way the Swiss do it. It's the Swiss way. Of course, it may be time-consuming and cumbersome, but if you create a platform where everybody meets and discusses matters, then you can make sure that you have the participation and the ownership of all the relevant partners. And also you can capture complementary expertise. And so the process is important in the sense that it then leads, even if it is long and difficult at times, it leads to something which is endorsed by all the participants and is then useful for all of them. And so the process as such is nearly as important as the result, because it creates this sense of common purpose. And I think that's generally how Switzerland, also domestically and in our political culture, how we function. Everything is radically bottom-up, is inclusive, is geared toward a conversation that must build convergence, which then eventually leads to consensus. It's a very Swiss approach to go about things.
Well, I'd love to ask you how inclusive you think the UK is, but I don't have time for that. But I want to...
You might ask that, but I couldn't possibly comment.
You have supported, though, and your colleague, your counterpart in Singapore, also hosted a discussion with commodity traders in Singapore, and we were hoping, obviously, to have a physical meeting with commodity traders in London, but COVID got in the way, and that's why we've done this webinar. How, sort of two questions to finish here. One is, why are you then promoting this guidance in other trading hubs beyond Switzerland? And the second is, now that COVID has turned up, how does that change the nature of the challenge, do you think?
Well, of course, if I say that it is a Swiss approach, but the aspiration is, of course, universal. It must be something which we mainstream all over the world, and hence we partner with partners all over the world. Now, of course, COVID has disrupted the whole supply chain, transport, demand, production. We are facing a public health crisis which will have very significant, major economic and social consequences down the line, even in the medium and in the long term. And so the fragile and unstable environments, which are often dependent on natural resources, are facing that situation as well. And there it leads to even greater insecurity. It weakens government. It can lead to social tensions, possibly even civil unrest, and hence an impact on business. So it is absolutely necessary to look into the matter, even in such a particular context of COVID. And I think that companies in that particular situation need to continue to respect the human rights throughout their supply chains. And the ones who have already integrated social standards in their management system have understood their importance for their own benefits and the benefits of all the other stakeholders, and will continue to do so. So I think, in a way, COVID is an accelerator and a revealer how important it is.
Right, that's very clear. Now we've had three questions through already on the question stream. I'll read them out because they're the first three, and it might incentivize others to ask questions as we go along. So both Matthew and you, Ambassador, you can comment on these as well as my sort of final question to both of you. But Ruby Singh says, how can we convince a customer for the situation going on. Victoria Head says, you speak of a multi-stakeholder approach. Could a principles-based approach create a better foundation? Or do you perceive the stakeholder approach a necessity in order to be inclusive throughout the value chain? And Desiree Abraham says, will the London Metal Exchange brands be expected to self-certify compliance with forthcoming LME standards, or will they be subject to independent verification? So some good questions there already. My question for this part was to just ask you where you think we'll be in a couple of years. We heard from Commissioner Hogan yesterday reference to DG Justice's proposal for binding mandatory due diligence in the European Commission, a proposal that will be considered next year. There's a referenda in Switzerland to that effect as well. In the UK, we have the Modern Slavery Act. So where, maybe Matthew first, where does COVID take us along that path? And also, do respond to any of the questions, particularly the one from Desiree Abraham, which is directed to you.
Yeah, I would like to just pick up this question of verification versus self-certification, because this has probably been where the LME has been on the biggest learning journey. We generally at the LME come from commercial backgrounds and we run an exchange, and exchanges are really all about rules. It's you must do this or you must not do that. We have a rule book that's that thick for our traders. We love rules. And so when we started on this project to embed the OECD guidance, we saw it as being very much a rules-based audit and assurance type approach, because that's how business tends to solve many problems. One of the things that we found very valuable, particularly with the engagement from civil society, who've been doing a huge amount of work on this for much longer than we have, is an understanding of the value of transparency and going back to the idea of giving informed consumers the ability to make a choice. So to answer Desiree's question sort of directly, we see it at two levels. So the OECD guidance very helpfully prescribes the red flags. And we believe that companies should be able to self-undertake a red flag assessment. And they either, because there may be commercially sensitive information there, so they either get that audited or they just publish it. Because we believe that transparency is as powerful a tool as audit. And we would hate to only make this available, only allow the biggest brands with legions of lawyers and auditors to get in here. So I think transparency is hugely important. If you engage red flags, then we do ask you to go down an industry scheme, which will be alignment assessed to the OECD principles. And of course, that does involve a verification step for independent oversight. So it's risk-based. And I personally think that's fair. We spent a lot of time trying to get that balance between transparency and audit, and very interesting views, but I hope that's the right balance. And that really answers your other question, John, which is, where are we going to be in a couple of years' time? Well, COVID or no COVID, my real hope is we're in a position where taken effect. We have all that disclosure. The brands have all been through either the transparency or the audit assessment route. And we're very comfortable that we can say to people on the LME, when you're buying metal, that it obeys that OECD due diligence guidance.
Thank you very much. Ambassador Fazell, Victoria's question is particularly focused on you. I think this multi-stakeholder approach versus a principle-led approach. Maybe you want to respond to that, but anything else you'd like to say about the way forward?
Frankly, no. I think the bottom-up multi-stakeholder approach, where you come together, you discuss matters, you patiently build consensus, you produce a common sense of purpose, is the way to go. As it is, generally speaking, in multilateral affairs, you cannot issue edicts and say do this and that if there is no conviction that it is a shared interest of all to do so. So we really think this is the preferred course of action. But in the whole situation, and also with COVID, we are seeing how we see confirmed what we knew all along, namely that health is a global public good. And we all know that everybody must be involved in safeguarding and promoting global public goods. So we need to do that together based on a joint understanding of what the challenge is and what we want to do together in order to tackle it.
Thank you, Ambassador. I'm going to move on to our other panelists now. You and Matthew might slip off stage, but you'll still be in the orbits, and I'll bring you back when we get into fuller discussion. But thank you for the time being. Pamela Koch Hamilton, UNCTAD. You're on mute, Pamela, I think. So we need to unmute you, or if you can unmute yourself, there you go.
Hi, how are you?
Thank you very much.
Good.
I mean, you're sort of the UN's think tank, I guess, on trade and development policy, and there's a lot to talk about.
Yes, it's a pretty big issue, yes.
It's thinking about trade in that sort of slightly wider sense, and the urgency of COVID. What do you think the moral mandate is for us all, and what's the UN's voice on this?
Well, let me start out by saying that, one of the questions that I heard raised earlier is, how should trade adapt and reform? And the truth is, trade is already adapting and reforming with or without the interface within which we need to do so, because the COVID-19 has had such an impact that trade has necessarily changed as a result. So I think it's imperative for the international trading community to be fully engaged and to begin to look at how the trends that have been developing can be addressed so that they're not incredibly destructive to developing countries. Some of the trends we've seen, for example, are the imposition of these export restrictions. There are over 183 now. I think 83 countries have done it, and mostly, of course, from the developed world, which of course has the necessary onward impact on the developing countries, who are mainly commodity exporting countries. We've seen the dumping of food, the precariousness of migrant labor, and of course the calls for more localized production. So how do we then begin to look at what should happen here? The shock has been more a demand shock in the commodity sector. So what we've seen is that developed countries, by virtue of closing their borders, etc., have reduced the demand for commodities. And in addition to which, the lower income countries, because of the lack of demand, have not been able to earn, and therefore low income means less demand. So the problems we're seeing are one of production, but also one of supply, based on the fact that they're closed, and also price volatility. So the moral imperative for me would be a few things. One clear point I'd like to make here is that the fundamental human right, in my view, is the ability to earn a living wage from your labor. And one of my biggest issues with the commodity sector as a whole is the share between what the retailers and the, say in the case of coffee, the roasters receive, and the coffee farmer in Ethiopia, who gets maybe 2% of anything that is produced. So that's the first thing that needs to be looked at. The second issue is, supporting diversification in these economies. 2/3 of developing country economies are commodity dependent developing countries. How do we change that rubric? And given the precariousness of what has happened with COVID-19, how do we address, moving forward in this area? And one of the critical areas, I think, is to look at improving the value addition at the country level, as opposed to the continuous export of raw or primary commodities, without looking at improving the ability to earn on the countryside. So I'm not hearing you.
Sorry.
Yeah.
Please keep going.
So, these are the kinds of issues I think that would be important to look at. The final thing is, I think the multilateral trading system needs to stay open. It needs to take into account how to address the issues and the needs of the vulnerable economies based on the export restrictions that have been put in place. And are there any mechanisms that can be put in place to either compensate or address the fallout in developing economies? You take, for example, Kenya is losing 2.5 million per day from its horticultural sector because the European European stores are closed. And so when you have that effect, knock-on effect, what happens? So those are my initial comments with respect to.
Thank you. I'll come back to you in a second. Tyler Gallard from the OECD, you had your own webinar yesterday on responsible business conduct in the time of COVID. So what are your takeaways? I mean, in the sense of the question is your key initial takeaways from that. Mm-hmm. What does that mean for due diligence in commodity supply chains? What do we learn now?
Well, thank you, John, and hello, everybody. Well, I mean, I think what we learned yesterday is a few things that some things that a lot of us working in the space already knew, and some things maybe we're learning. One is that, this crisis has exposed major vulnerabilities in global supply chains that are linked to conditions of work, to precarious conditions of work, linked to disaster preparedness, linked to highly leveraged corporate debt, and all these things. What we are learning is that companies that had invested in their workers, invested in supply chain information, had rainy day funds. All of those things, they're doing much better. And I mean, I think financial markets reflect that. ESG funds are actually doing much less badly, so clearly better at managing tail risks. And in fact, more money is being dumped into ETFs that have ESG things in the last 2 months than in the last 2 years combined. So clearly investors feel and sense that, this is a crisis that has exposed things, and that businesses that have invested in social dialogue and workers are going to be poised better to guard against stock volatility, I think, to protect the value of their brands, to stay more productive during the crisis, because we know that if we have to furlough, lay off workers, or you cancel your relationships with business partners, trying to restart that is going to be costly and have a major impact on productivity. And it's also about protecting the value of minerals itself, and I'll get into that. So I think we learned that responsibility and resilience in supply chains are really interlinked here. And the crisis and a lot of the policy options that are now being considered are now going to be reinforcing that. We learned that government packages and stimulus packages have come out at a really unprecedented scale in force and speed. And many of those packages have links to conditions of work, with conditions around rehiring, wage payments, disaster planning for the future. Now, that varies considerably across governments, but certainly most governments are thinking about the rate of connecting their financial stimulus to a range of issues around responsible sourcing, due diligence, et cetera. I think, what does this mean for businesses going forward? Especially if you're businesses that did not invest in those things. Of course, it's going to be a little bit tricky to say, okay, now I'm facing insolvency. But I would say that the first thing is, stay the course. Don't cut your sustainability teams. Don't cut those costs. Try to look for other ways to cut costs, including by canceling dividend payments, by canceling or postponing executive pay to avoid layoffs. Because these things are going to add much more medium and long-term value and help your prospects of recovery. Obviously urgently get information on your supply chain. We heard that from Matthew of that being a major added value, but use, the UN guiding principles and OECD guidance as the lens to understand vulnerabilities in your supply chain. We know that in the metals sector, 80% of the workforce are artisanal miners, even though they make up a very small percentage of production. Those miners are at huge risk. So I think I agree with Pamela. This has been more of a demand side shock in the market. But a lot of the big producers have taken the step to protect their workers and say, okay, we're going to shut down our mines right now. But what happens is the informal workers keep operating. And in fact, what we've seen in reports on the ground is that actually illegal and criminal actors are benefiting from all of that, because as the formal sector starts to shut down and obey the rules, this creates a vacuum for criminal actors to come in and help, circumvent confinement measures and restrictions. And the artisanal mining community, small-scale farmers are particularly vulnerable to those threats. Now, what does that mean if you're a commodity trader? You may not have relationships with them. So, we found yesterday as well that platforms and collaborative initiatives will be critical. Many of them have presence on the ground already. So whether that's cocoa initiatives, whether that's, initiatives on tin and tantalum or gold, we keep lists of those things. Urgently engage with them and allocate funds if you can to help them with preparing their response to the crisis, to addressing those informal workers and the supply chain and empowering them. And I guess the last point I would say, is just this point about value, also to reinforce what Pamela said. Due diligence and responsible sourcing to date, particularly in base metals, is kind of a price stabilizing factor. What that means is that it doesn't really necessarily yet add value to consumers. Consumers and buyers aren't paying more for stuff from conflict region just because it's responsibly sourced. But responsible sourcing helps protect the value of things from high-risk jurisdictions. But that means that it's very difficult for upstream actors to pass that cost down in the supply chain. And the result being there's lack of a living wage for many miners and many farmers in the supply chain. And so I think that is a primary concern right now when those actors cannot access essential goods and services because of the various prices and pressures that they are under. So thinking about downstream actors using those goods, paying real value for those goods and services as they're being produced. Thanks.
I'm going to read out 3 more questions that have come in, not for you to answer them immediately, but just for all 3 of you to have them in the back of your heads for the discussion going forward. They're good questions, and I wanted to read them before they come off the screen. Martin Watkins asks, what are the panelists' views on how business and governments can avoid short-term economic demands post-COVID-19, undermining the societal need for responsible supply chain tracing? Martin Watkins. And I mean, what's in my mind is also the fact that some businesses have got rid of their sustainability teams or have slimmed down their sustainability teams even before COVID. And I'm sure not everyone will follow your advice there, Tyler, unfortunately. Angus Brown asks, why does there need to be a balance between transparency and independent verification? Surely they can work together. Vijay Mani asks, with push towards near-shoring and shorter supply chains, do you think we will still be able to push for human rights issues in global supply chains? Very interesting question. A leverage question, I think. And then Paula Maresca, question for the ambassador when he returns. I was wondering if the Swiss government plans in the near future to raise awareness of Swiss-based shipping companies' due diligence efforts based on the UN Guiding Principles and the OECD guidelines, but also on compliance with a wider range of maritime and labor conventions. So maybe Ambassador Feazell can hear what I'm saying and he can pick that up when he comes back in. But Pamela and Tyler, a question to you both, and then I'll come to Jan. It's sort of more or less what I said I'd ask you, but I mean, the big question in my head at the moment is, to what extent is this a due diligence problem? The European Commission yesterday suggested, because they're moving towards mandatory due diligence possibly, Commissioner Hogan referenced that in relation to trade, bilateral trade agreements. It's an issue for export credit agencies and trade finance. But I think in your comments, you hinted at there being more systemic issues at play. So both of you, in a way, if we are moving towards better due diligence guidance for commodity traders, how much of the problem are we solving there? And I'll start with you, Pamela.
Am I unmuted? Oh, okay, sure. It's kind of hard to get used to these platforms, one of the things I was thinking while I was listening is that the tendency is to believe that putting in place due diligence mechanisms and looking at human rights and environmental factors are going to be a loss, and therefore it's resisted. And I think if we change the mindset, that is going to be a critical thing. One, because when we discuss the issue of value addition for take the Democratic Republic of Congo, if you increase the ability of persons within countries, commodity producing countries, to earn a better living from the produce that they do, you necessarily then, by extension, reduce the amount of foreign aid that you then have to pour into that country to solve a human rights crisis that didn't have to exist in the first place. That's I think that the whole ability to switch our thinking on why due diligence is important, why it will not be a cost to you, and why it matters that you are, one, enabling human rights, two, reducing the carbon footprint, and three, trying to ensure that there's sustainability throughout the process. So for example, if we look at preventing export bans, one of the first things that countries tend to do is they lock their borders in and we're going to stop exporting. The impact on developing countries, especially those that are dependent on food exports, is catastrophic. And we've seen the long lines of food queues lining up just in less than 2 months. So can you imagine if that process continues and there's not due diligence put in place? The other issue is the price stability factor, banning or limiting speculation in commodity markets. That's of course harder, but it's something that I think we need to look at, and we need to ensure that we're able to balance the needs, not just of the developing countries, but also the needs of the commodity traders and the investors. But it's important to look at the systemic issues that underlie the commodity market. And it hasn't changed in 60, 70 years. We're still doing the same thing we did before. Right. Export the raw commodity, and then buy it back at 4 or 5, 10 times the price. How has that worked? And it's a significant
due diligence question, Pamela. That's a more systemic question, is it?
Yes, it is. Yes, it is. But the issue is due diligence, in my view, can't really succeed unless the systemic issues are also addressed.
Right.
Because due diligence is like the Band-Aid on a really huge sore.
Yeah.
It's just...
Well said. Tyler, so how much of this is a due diligence problem? Is it a Band-Aid on a bigger sore?
Well, it's clearly a global health problem, but I think the lack of these systems in global supply chains has greatly exacerbated the impacts of the problem. I mean, it's a health crisis. Many people were predicting global pandemics. Many people didn't listen, but I don't think we can put this as business's fault that there's a global pandemic. It's not, and let's not pretend it is. But how the impacts have been managed or exacerbated really do fall on the shoulders to the way certain businesses have structured the business in the way that they work. If business models thrive on precarious work, then the impacts when things like this happen are going to be much worse. I think getting to some of the questions that we see coming up, first of all, transparency and independent verification, yes, they do work together. And I think what Matthew was saying, at least I can speak to what OECD says, is that when you're a low risk commodity trader, it's purely transparency. Whereas if you're more medium to high risk, it's transparency plus independent verification. And that's just to keep things, to avoid resources being spent on third-party audits and rather on actually doing good due diligence. So I don't think they are actually working together. It's not one or the other. It's just at what point do you expect verification? And do you want it even if someone's very clearly a low risk commodity trader? The bigger question that I think is good is, how do we ensure that, particularly with short-term economic pressures, that we do stay the course? And I don't think we should fool ourselves. We have seen in one large OECD member environmental enforcement being cut. We have seen in another emerging market labor enforcement being cut and suspended for 3 years because of COVID crisis. That's what the claims are being made. And we do know that sustainability teams are being cut. So that is the reality here. At the same time, as I said, governments can help here. These incredible stimulus packages that are emerging, they should be thinking about, are we directing towards parts of the economy that are going to add value when we add money into the economy? Are we pushing into renewables? Are we pushing into lots of things that are going to be necessary for creating jobs in the future we want? And what kinds of conditions are we requiring? So there are solutions, but we have to be realistic. You're on mute, John. Thank you.
I was yelling at my daughter in the room next door. There's somebody at my front door and I can't answer it.
Yes, I saw her at the back there. Hello.
The joys of home working. But I will stay where I am. And Jan, we'll come to you. Jan, Anglo-American, big mining company, known to many. You also known for your due diligence in relation to mining operations. But to what extent have you applied that same due diligence to your trading and marketing functions? You trade your own assets, and to some extent you trade other people's assets. So have you extended that approach to the sort of midstream of your activity?
Thanks, John. I hope you can hear me. Yeah?
I can hear you fine, yeah.
Okay, perfect. Thanks for the invitation. Thanks for the question. So as you said, maybe for background, our marketing or our marketing business, as we call it, is the business unit within the Anglo-American group that is effectively our trading arm. And as you said, it's about purchasing, selling, but also in some cases processing, storing, blending, etc., both equity product and third-party product. And that is a business unit that we have actually, that is still relatively young. We only started doing this in 2012-13. Previously, we were really just a mining house, a producer, and did not very much engage with whatever comes afterwards. Obviously, that has changed. And because we have group requirements and group standards, they obviously apply to all our various businesses. So human rights due diligence, which is part of a mandatory standard within Anglo-American mining operations, in terms of our marketing business unit, is integrated into our KYC, Know Your Customer process, KYC. And the KYC process is followed for each of our potential counterparties. So basically everybody we're looking to do business with. And that includes potential counterparties for transportation services, storage, but also for offtake of our product. If okay, I'll briefly line out what that KYC process looks like for us. At least in theory, what it should look like. So as a first step, in the process, our potential counterparty is required to fill in a questionnaire and submit supporting evidence where that is needed. So self-assessment. Besides detailed legal and financial information, the questionnaire also covers a range of human rights related topics, including sanctions, bribery, corruption, anti-money laundering, modern slavery, etc., environmental protection, health and safety issues. And a lot of that has actually been informed by the Anglo-American responsible sourcing policy. So the policy that we would use in order for our own purchasing of goods, services, etc. Then the KYC team is taking that information that has been submitted through the questionnaires and will analyze that. We conduct a screening. The screening consists of desktop research using risk intelligence databases that are publicly available. You look for adverse news, complaints, allegations, etc. By whether it's international organizations, NGOs, other third parties. We also look at counterparty is actually based and run that location against our own list of high risk or no-go geographies. So it's linked with a country risk process that we run on a continuous basis within Anglo-American, and that risk or the risk rating of the country obviously takes into consideration multiple factors, including the human rights situation in that jurisdiction. If any of this raises any red flags, so i.e. if it is a high risk transaction, we will go and investigate further, and it becomes what do you call it? A sort of a boxing match between the different interests within the company to a certain extent as well, in terms of the trader versus compliant, not versus, but jointly with compliance with us sitting in the government, on the government relations side, with the sustainability colleagues, etc. Whoever needs to be consulted. Or we have a third-party consulting firm actually conduct due diligence, depending on how much information we can actually get or not. Then that will then typically result in defining appropriate mitigation measures to mitigate the risk. And that can be anything from training to certain commitments of the potential counterpart. It's obviously on specific issues. If we think we can resolve the issue to our satisfaction, we will go ahead and put these things in place. If not, we can obviously not move forward, and that's something that has happened on a number of occasions. Most recently, with a shipping company, for example, that had a poor track record in terms of human and labor rights, which then is not going to go ahead. This is how things ideally would look like, and as you can imagine, or as we all know from practice, the devil's in the detail, and it's not black and white. But it's, in theory, it's clear. It's fairly straightforward and clearly defined.
Okay, let's move on to commodity, and happy to come into this too. Let's take copper. Copper is something that's traded at LME. It is also one of your commodities in Anglo American. If we were to take the supply chain of copper, and as I understand it, a lot of copper comes from Latin America, but Africa also, and to a growing extent the Arctic region even. It's a commodity essential for the green revolution and for the electrification of the world. So it's a commodity that's going to be with us even with climate change. So let's take copper. Jan, how far are we in terms of the trading function around copper? Your own commodity, but maybe you're trading other people's copper. You know, what are the steps in terms of vertical integration around copper?
So I guess in terms of the parts that we can control, in terms of our own operations, where we actually conduct or execute the steps ourselves, be it on the mining side, be it through direct business links, I think I told you what it is that we're doing. When it comes to sort of the vertical integration along the value chain of human rights due diligence, I think as a wider industry, both in terms of mining in general, but also specific commodities like copper, a lot of parts in the puzzle are aligning. So there are many trends and pieces in place, and we've heard many of them in Tyler's comments, in Pam's comments, and also from the opening speakers. And I'll just briefly run through those. I think we obviously, I think there is now in general a much better understanding of and awareness for the necessity of human rights due diligence across along value chains, and that to the human rights expert community, that may sound as a duh, of course. But I think it's an important point to acknowledge that is not necessary, has not been the case necessarily across along the value chain. I think societal pressure was mentioned earlier on, and that can be very focused on specific topics or on specific commodities or in specific regions. But it helps to tighten the overall web, because it's all coming together. You've got obviously an increasing legal and regulatory pressure. You were alluding to the EU's plan. We've got France and a couple of other countries that actually have already introduced the concept. There is also, and again, that's something that was alluded to earlier, there's an ever-growing landscape of certification schemes.
Yeah.
They by themselves may not be vertically integrated, but they put together pieces along the value chain. Obviously, there is a lot of work to be done in terms of cross-recognition, and the ambassador earlier was talking about his support for a multi-stakeholder approach. Some of these schemes are more multi-stakeholder, others are more business-driven, others are more NGO-driven. So I think there is a lot of alignment that needs to happen. We, from an Anglo perspective, we've been very engaged with IRMA, the Initiative for Responsible Mining Assurance, because it covers all commodities, but also more specifically with the Responsible Jewelry Council and Responsible Steel.
Yeah, thank you.
Then another very important point, I think.
Just quickly, briefly.
Sure. Technological progress is enabling a lot when it comes to tracing, right? And I think that was alluded to earlier on, leveraging technologies like blockchain, producing digital twins, and actually following them through the value chain. So, having said that, I think we can not speak properly about a vertically integrated human rights due diligence approach across copper, for example. That's also because we may have parts or we may have pieces in place on the upstream side, and there may be strong pressure on brands, for example, that are consumer facing on the downstream side, but with fairly complex and long value chains like copper has, there is a lot sitting in between, and actually us as a company and at the upstream and the downstream users, they do not have full visibility, transparency of what's actually happening, and knowledge and expertise of what's sitting in between.
No, that's perfect. That's interesting. Matthew, I'm bringing you in now. Where are we on copper? You're one of those bits in the middle. I mean, Jan was talking about the long value chain. You're in the middle of the copper value chain, and I'm interested in things like blockchain and traceability. Whether you think these things are going to allow for vertical integration or not.
Yeah, so I think it's very important to draw out a couple of axes here. So we've always been very clear at the LME, whether it's our metallurgical standards or the new OECD-derived standards, that they are very much the minimum expectation of the market. So metallurgically, that's always been the case, right? There will always be higher grades of metal for specialist applications, which go above and beyond what we prescribe, and they command a premium. And I think it's exactly the same on the human rights and the environmental, that we need to, because much of the metal flows through us, we need to define a global minimum standard, but to be very clear that there may be ethical and linked commercial reasons for going beyond that. So I think it's really important to realize that there's a minimum, and then there's things that build on that. So yeah, there are a proliferation of standards, but they are for a number of different reasons and a number of different applications. And I think we should embrace that. The other axis is how those standards interrelate. And again, we have been working very closely with industry bodies. So looking at copper, you recognizing just the fantastic work that ICA, the International Copper Association, has been doing with its copper mark, which has a whole bunch of different aspects. But one thing that we've managed to work very closely with ICA on is to make sure that if you have ICA, that ticks your LME minimum standard box. So I think we should welcome a proliferation of standards, because it shows that people are thinking about the different requirements and the different applications. But to the point the previous speakers have made, let's try and embed lower standards in higher standards as much as possible, so that there is that cross-certification. And then the final point on the blockchain, I think technology has a huge role to play in helping diligence these things. So you got the standard, and then how do you prove that it's being applied? That's where I see the application of technology, and they will probably be commercial solutions. Let's be honest here, we need to have a whole bunch of commercial companies out there saying, I have a good technological solution for you to prove your adherence to this standard, just like we have in financial auditing. You're going to have that in non-financial as well. So that's how I see the pieces kind of fitting together as building blocks.
So we've got 10 minutes left, and the ambassador is back with us. So I want to make the best of these 10 minutes. I'm going to allow each of you to make your final reflections, but also to have a go at another set of great questions that have come through. So I'll just read the questions out, and then I'll give you each a chance to answer, and I'll start with Pamela, and I'll work my way round. There was a question for you, Ambassador Feazell, about whether the Swiss government will take the same approach to the shipping industry and shipping companies based in Switzerland. Ashraf Patel asks, in terms of mining in Africa, there's still child labor in the Congo and many parts of Africa. How can we strengthen compliance in mining value chains? Sandy Tishambalala asks, I'd like to know from the panelists, is there a business case for ESG considerations in emerging markets, Africa, particularly on child rights and labor with COVID-19 context? Anik Bindler asks, what about your arguments to commodity traders why they should prioritize mid-term, longer-term impacts on human rights environment rather than short-term monetary goals? What are your buy-in business case arguments? Any hard facts, empirical data you can name? A really great question there. And then Martin Watkins, what are your panelists' opinions on the impact of escalating trade wars on responsible global supply chains, says Martin Watkins. I'll start with Pamela, and then I'll go to Ambassador Feazell, and then I'll bring the other three in. So Pamela, go ahead.
Okay, thanks. Let me start with the question that I think is at the top right now, is the trade wars. I mean, there's no question, we've seen what has happened over the last year leading into the COVID crisis, trade war between the US and China. If this continues, the impact on global value chains is going to be difficult. It's going to, already we're seeing the shifting of production, the shifting of markets, the shifting and changes in global supply chains. So it's not going to be positive if it continues at this rate. And therefore we have to make sure that enough international pressure is brought to bear so that it does not occur. On the second one, which I find really interesting, is the issue of the arguments to commodity traders on why they should prioritize midterm, longer term human rights and environment. Well, besides just the morality of it, I mean, not that companies really care about morality, but anyway, besides just the moral suasion issue, it makes economic sense, because in the final analysis, you are investing in something that will definitely produce more and last longer if you continue on a sustainable basis, as opposed to the grab and go kind of approach. Investing in human rights, investing in an environment ensures that it continues way beyond what has happened in many countries. For example, I'm from a sugar producing country, and when they kill the entire ability to replant, and therefore the capacity for the sugar cane to actually grow and grow effectively, then you kill the entire industry. There needs to be an ability to look at how people are doing and how the environment is doing in respect of the commodities. So those are just my comments.
Thank you very much, Pamela. Ambassador Feazell, concluding remarks from you, and particularly the question there about whether Switzerland can take an interest in shipping.
Yes, thank you very much, John. This is a very fitting question because the answer is yes. And again, same logic, the importance of human rights, generally speaking, and shipping as a very important element or industry in Switzerland. You know, although Switzerland is a landlocked country, we are, of course, a great seafaring nation, and not only in yacht racing, but also in shipping. So indeed, the idea is to seek to involve this sector in the conversation about non-financial due diligence, and to motivate the commodity trading community to take into account also the shipping industry. We intend to build on the work you have done with the Institute with Singapore, and we have just 2 days ago for a 1-year project to get that project rolling. So the answer is yes, and the work is on the way.
Look forward to that. Great. Tyler, final comments from you. Any responses to any of those questions we've had?
Well, it's been a great panel. First of all, and I will lead into I think some of the responses, I just want to really recognize the work that the LME has done here. Commitments, you really cannot underestimate how impactful that will be. I believe that, as Matthew has said, they were following the market there and not driving the market, but we really need this in other markets. I mean, that as a market-making organization, the leverage and impact that can have is huge. So I think we need to focus on other metal markets, but also the soft commodity markets adopting similar requirements, because they are critical control points or choke points in these supply chains. And it will make it a lot easier for all of us if they adopt those requirements. So let's look at the soft commodities, see if they can adopt it. I think the benefits point is hard, because it's what is the benefits of risk management? It's what's the benefits of avoiding a negative. We have data. It's not COVID specific, but if you Google OECD cost benefit due diligence, you'll see a study that we worked with Columbia University on quantifying various benefits, particularly in commodities. This is now becoming a sort of sanitation requirement for financing, particularly access to good rates. So it's becoming a market requirement in order to get access to financing, at least at preferable rates, to get good clients. So a market access issue. If I want to sell to an LME brand, it's probably going to be a requirement pretty soon. But it's also sometimes a requirement to get sources. We know in the gold sector, for example, that small refiners just can't get access to large-scale mine sources, just because they're like, well, we don't have the miners don't have the trust in those traders in representing and marketing their commodities effectively. We have some actual hard data, but it is very situation specific, and every metal and every commodity is very, very different. So it's hard to come across. But Google cost benefit. We're going to be putting out a study, and also want to acknowledge LME's help there, on looking at the value of due diligence and metal supply chains specifically, and how that is shared or not. It also touches on what Pamela spoke about around living wage. It touches very closely to that issue. That should be coming up in the latter part of the year. So something to look out for. Thank you, everybody.
Thank you, Tyler. Jan, final words from you, reflections.
Hello. Hi. Sorry, I've got a North Korea moment. Where the kids walked in for this really well-known guy, and they're both standing here and listening to this. But it's good that they learn early, hopefully. I mean, maybe just 2 quick points. I fully agree with Tyler on the importance of the LMEs venturing into this space in terms of the signal that it actually has. I mean, the LME is a clearinghouse, so the majority of trading actually happens outside. But it's still very significant in terms of the signal that it sends. And we very much welcome that step from our side. On this question of how do you convince or what arguments do you give to traders? Let's first of all keep in mind that trading means many things, right? It's not just buying something and selling it immediately, but sometimes you make longer term offtake agreements in exchange for equity positions, which then gives you a totally different leverage also to bring in. And that's where I think things like the cost of conflict, Daniel Franks and Rachel Davis, who have actually quantified that, just to actually have business continuity and not lose money. So the question is almost to be flipped around. What's the risk of not doing this? And traders are very risk. They just have to understand this kind of risk, right? What the consequence actually is or could be of not addressing it properly, which then leads you back to the necessity for due diligence, right? To actually undertake it in order to price your risk properly. The other thing is obviously looking into the way compensation takes place.
Great. That's good. Matthew, final word to you.
Yeah, so maybe just to echo the points that everyone has made about, why does this make sense for commodities traders? It's saying we've been trying to sell, and I think the risk point is absolutely right, but I think you can also extend it into opportunity. And what I mean by that is that there are certain elements that are just effectively going to become hygiene factors because there are certain behaviors that the world simply isn't going to accept. And therefore, if you fail to manage that, that's a significant risk, as everyone said, and we all need to manage risk. But particularly on the environmental side, I think that can also, and you see this particularly in the aluminium industry right now, that can be turned into a huge commercial positive. That the value of going out and saying that we can produce aluminium with a given carbon footprint or a given impact on indigenous rights when you dig out the bauxite, or a given water management profile, or a given environmental reclamation policy, that is becoming valuable. Now, clearly, as the exchange, we can't wade in and say what the price should be, but it is certainly theoretically possible, considering how markets work, that if people want more of something, the price goes up. It is certainly theoretically possible we could find ourselves in a position where people who can produce a metal with a given set of desirable environmental characteristics are able to recognize more value for that. And that should set...
That's such an interesting question. Is it the case already that due diligence already has a commercial value? It just hasn't been quantified. Is that what you're saying?
So I believe that it's a prerequisite for having a commercial value. We haven't yet in metal seen that sort of bifurcation or spectrum of values. And even for low carbon aluminium, there doesn't seem to be a premium for it yet. And like I say, it's not my job to say whether there should or there shouldn't be a premium, but I think we should certainly provide a mechanism whereby if that premium does exist, it can be tracked and observed, and then the right messages can be passed down the supply chain saying, this is something the world values, so do more of it. And that's what markets are for when they work well. They're for sending those signals about what consumers want.
This is super interesting. We're over a minute or two, but Tyler, you want to come back in, so I'll let you do that.
Just to really support Matthew's statement and just to add some nuance, that within specific metals, we are starting to see a premium emerge, like gold, for example, where you have products that are sentimental. My wedding ring is from a mine in Colombia, from post-conflict, certified as responsible. So there you're able to charge premium. And you see that with some soft commodities too, where, for example, fair trade or tea or coffee might, but not in all circumstances, and how well they function are again up for debate. So within commodities, that varies a lot. I wanted to say one more point because I'll get really in trouble. We also, our stakeholder group in which LME is a part of, and many of you are a part of, also adopted a call to action about responsible mineral supply chains in the COVID response. Over 50 organizations and countries, including the DRC government, the United States, and the EU, and Switzerland and the LME joined that call to action. So if you want to see some very specific asks of policymakers and business, see that call to action, Google call to action, responsible mineral supply chains. Thanks again.
Thank you very much, everybody. Thank you to all the speakers. This conversation will continue, just not now, but there's a lot to do ahead. Our own COVID and human rights report that came out a month ago is on our website, 60 pages long. It's already garnered a huge amount of interest over the past month. These 3 webinars will also be posted online. This one will be up in a few hours' time for others to watch. And I'd like to thank everybody who made this possible, but particularly my colleague Guido Battaglia, who has been leading our work on trade for the past couple of years. Guido, thank you very much to you. And thank you for the audience. And sorry we didn't get through all the questions, but we'll try and post some. We had 10 questions in advance that we didn't even get to, but we'll try and post answers to those questions on our website as well. So thanks very much. Bye-bye now.